You are on the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView, and in today's video we will be breaking down a pair both from a technical and an order flow perspective to understand where are the best probabilities on it for a trading opportunity to obviously capitalize on the next move of the pair. So the video will be very educational and practical, so without further ado, let's get straight in it. Okay, so let's make a full breakdown of the situation that currently we have on GBP USD. Now, why do I want to speak specifically about this pair? Because first of all, it's one of the most traded pairs in the market. Second of all, this pair is very near to providing to us another good trading opportunity. So it's definitely time to speak about it in spite of the recent developments that we have seen from a structural perspective, as we will now see. And as usual, I will keep the analysis as educational as possible. So first, we will be breaking down this pair from a technical perspective. We will then go and see what we have from an order flow perspective with the commitment of traders, which is what hedge funds are currently doing in the market. And obviously, if you're able to follow what the biggest banks and institutions are doing in the market, you do have an advantage over your competition in the market. And by the end of the video, you will also know what kind of opportunity we can be looking for to capitalize on this pair. So this video will be both educational and practical. So let's start with analysis. Now, starting here from a monthly perspective, what we can see is that the market has just completed and has basically been completing two very important patterns. First of all, we can identify this W formation here, and we can also identify this impulse correction and impulse pattern to the upside. Now, these two patterns usually are always connected. So what usually happens in the market is that after a W formation, what you expect is for the market to go and complete the pattern at the neckline, which is exactly the previous resistance, not our support. And then from the neckline, which as we have just said is a support area, we expect the next move to the upside to start to basically complete the impulse correction and impulse pattern to the upside for the creation of a higher high. And what we can see here is that this is exactly what the market has done. The market has created this W formation, completed the pattern at the neckline, which is the previous resistance, not our support. And currently the market is providing the continuation to the upside for the completion of this impulse correction and impulse pattern to the upside. What we can also see is that, generally speaking, after an impulse in the market, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market has retraced exactly to the 50% of the Fibonacci taken on this impulse before starting the continuation to the upside. Now, why in this specific case, the 50% is exactly the Fibonacci at which we expected the market to retrace? Because if you look closely, the neckline of this W formation is exactly here, meaning that the 50% was the Fibonacci level that was lining up the best with structure, creating a confluence of support which the market tested and from which the market got rejected to the upside, which is as well what you usually expect in this kind of situations. So on the monthly, the market has been behaving exactly as we usually expect in this kind of situations. Let's go down on the weekly time frame and see what we have from a weekly perspective. Now, going down on the weekly, what we can see. The first very important thing that we can see here on the weekly is that the market has been moving as you usually expect in this kind of situations. The structure has been respected quite precisely. We have this impulse to the downside, followed by this correction. Now, after an impulse and a correction, the market usually follows with a continuation to the downside, which is exactly what the market did. Then we had a quite strong break to the upside. And as you know, a high in the market is a resistance level. But as you also know, previous resistance, once it is broken to the upside, is turned support. So after the market broke above this previous resistance, this resistance was turned support here, and the market broke and retested this level, basically retesting a level of previous resistance, which at this point is turned support, and from which you expect the market to create a move to the upside, which is in fact exactly what the market did. And then the market tested another important structure area, which is this wick here. Now, why is the wick of this candle important? Now, This is exactly what we had spoken about in our previous analysis. We identified that this wick here is a very strong supply area, and from such a supply zone, what we expected was for the market to create a move to the downside, to reject this supply, which is exactly what the market did with the previous weekly candle, creating a massive rejection to the downside that has currently tested the support that we have here. Now, why do I say tested the support that we have here? Because if you look closely, the last time that the market went to the opposite side before creating this move to the upside is exactly from this high. This high here is exactly the last time that the market went to the downside before creating this move to the upside. So it is exactly the previous resistance, which is now turned support, which the market just tested and rejected to the upside. Going down on the daily time frame, what do we see? Now, from a daily perspective, price action has been quite clear. We spoke about GBP USD after the market had provided this W formation. I made a full breakdown of GBP USD when the market was here, and I explained all the reasons for which from here first. We wanted to see a retracement exactly to this level before the continuation to the upside, and that is exactly what the market did. Then I spoke about GBP USD again when the market was here, and I made a full breakdown explaining all the reasons for which from here first we wanted to see a retracement and then the continuation to the upside, and again that is exactly what the market did. Then we had the creation of this overextended W formation, from which I made a full breakdown when GBP USD was here, explaining all the reasons for which we wanted to see first a retracement and then the continuation to the upside for the creation of a higher high, and again that is exactly what the market did. Then we wanted to see the creation of this head and shoulders, but the same candle that created the move to the downside didn't close at the low, so the head and shoulders was not possible anymore. And after this break to the upside, when the market was here, I made another breakdown explaining all the reasons for which from here we wanted to see a nice move to the downside, and again that is exactly what the market did. And then we had this move to the downside, impulse, correction, continuation for the creation of a lower low. Now, at this point, there is a very important consideration to make. In creating this move to the downside, if we go and see what was happening from a COT perspective, we will see that longs were getting added. But by the way, you will find all this previous analysis linked in description. All the previous analysis that I just spoke about, you find it all linked in description, so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to analyze or cover in my next videos. But as I was saying, during this move to the downside, what has been happening from an institutional perspective is that hedge funds, so the biggest speculators in the market, have been adding longs. Now, one very important thing to notice, when you're checking the data for the GBP, what you are actually checking is GBP USD. Now, why you're checking GBP USD? Because all currencies on the spot are traded against the USD. So if you're checking the data for the GBP, you are actually already checking GBP USD. And what we can see is that with the last report, net positions have been increasing quite massively on the pound, meaning that we went from having minus 19k net positions all the way up to having plus 5.7k net positions, with 2.2k longs added with the last report and a massive 11.3k shorts closed. So during this move to the downside, hedge funds were closing their short positions and opening longs. What do you expect in this kind of situations? After a move like this, you either expect one last move to the downside to go and hunt all the stop losses below this low and then the move to the upside, or you expect the market to immediately start the move to the upside, which is exactly what is now happening. The market is starting a quite massive move to the upside, and that was quite clear that from an institutional perspective, we wanted to move higher because during the move to the downside, institutions were actually closing shorts and opening longs. So clearly, they were more interested in the move to the upside. Now, we currently still don't have the close of this candle. This candle will close in 9 hours and 15 minutes from the moment that I'm making this video. So we still don't have a confirmed break back above the structure. Which structure am I speaking about? I'm speaking about the structure here. Why is this level strong structure? Because it was a very strong area of previous resistance here, again resistance here, which the market broke to the upside, and at that point it was turned support, again support here, again support here. Now the market broke below it, and we almost for sure the market will create another daily close above the area. No confirmation yet, Still 9 hours to go, but we have very high probability that the market will close again above this area, which means that this zone will again be acting as quite strong support from which we can easily see the market create a continuation to the upside. So how we will be approaching this kind of opportunity with students? Now, as we have already seen on the monthly time frame, we definitely have the possibility to complete this impulse correction and impulse pattern to the upside. So more upside is definitely possible. Also, from an institutional perspective, we see that longs have been opened, shorts getting closed. We can imagine that we will actually get a break of structure in 9 hours and 13 minutes, which means that we also have the possibility to create an inverted head and shoulders if the market will give us a correction. So the way in which we will be approaching this kind of situation with students is as usual being reactive and not predictive. Now, the monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. So what we will be doing with students is during this move to the downside, we will be monitoring price action from a 4-hour perspective. Why 4 hours? Because monthly, weekly, and daily combined with the COT are the best time frames for the direction. But when it comes to confirmations and entries, the best time frame is, as I just said, the 4 hours. So during this move to the downside, we will be waiting for the market to shift from a 4-hour bearish market to a 4-hour bullish market. And as soon as the market will shift from a 4-hour bearish to a 4-hour bullish market, at that point, we will be adding GBP USD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside and completion of this impulse correction and impulse pattern to the upside and creation of a higher high. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. You find the link in the description. You will first learn all my rule-based strategies and then you can trade them live with me. Every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all questions that you have every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description and I will see you in it.